When it comes to fund selection, we all want funds that will outperform a particular benchmark over the long haul. But what most investors do, in our opinion, is not correct. Most people look at the 1 and the 3-year relative performance of managers, and then they pick the funds that rank in the top quartile over those short time periods. This may help you pick several good funds, but if you do this across your entire portfolio, in our opinion, it's going to lead to long-term relative underperformance. Just stop and think about it for a second. Market performance is not linear. Managers' relative performance, similarly, is not linear. And what you're trying to do is find a manager that will do better than its benchmark over the long haul. And if you limit yourself to selecting funds that have just done better over a near-term period, you're not setting yourself up for the optimum long-term performance. We are firm believers in mean reversion. What that means is that managers go through periods of outperformance and underperformance. Now, the inverse of that is to think that you need to pick funds that have gone through periods of strong underperformance, so 3rd and 4th quartile funds. That's not going to work either, because the good funds do spend some time down there, but the bad funds, the funds that have long-term trajectories below their benchmark, they live down there. So what do you do? How do you build a portfolio that's going to outperform over the long haul? So how do you build a portfolio that will outperform its benchmark over the long haul? With common sense and a lot of hard work. Forget the short-term rankings, they really are just noise. What you need to do is roll up your sleeves and really dig in and get to know your funds. This is exactly what we do in the open architecture team at Lombard Odier. We're a team of 15 people, and we do this and only this year-round. It's a blend of quantitative as well as qualitative research. On the quantitative side, we have a proprietary database, tens of thousands of funds that we then use to filter to search for funds that we think are going to offer the best risk-reward ratios over the long term. But for me, where I think we differentiate ourselves is on the qualitative side. We spend a lot of time with managers, we travel quite a bit, spend a lot of time on the road, and I can tell you what you can learn in meetings with managers on their premises is not stuff that you can learn from a fact sheet, and it is not what you can learn from a Bloomberg screen. Based on the turnover rate that we have within our portfolios, we turn over about 10% of the funds on our master list each year. I think we do a very good job of selecting funds that are going to offer very good risk-return profiles over the long haul. So what do we look for in our managers? Well, look for experience, we look for poise, and we look for consistency. We want our managers to believe that the way they invest in the market is the single best way to beat their particular benchmark. And arguably most importantly, we want our managers to be consistent, to continue to do what they say they're going to do, even when their particular strategy is not working. Believe me, each strategy has periods in the market where it underperforms its benchmark, and we need our managers to continue to do what they say they're going to do. If a manager can do this, they have a good chance of making it onto our short list. And once we feel comfortable with a manager over the long haul, we can look through the short-term noise, and we can decide whether if a manager's short-term underperformance is due to some sort of a change in the way they're doing things, some sort of a change in their strategy and their style, in which case there's a problem, or if it's simply just noise and their style is out of favor, in which case the market is really giving us a buy opportunity into a good long-term product. If you do all of this, in our opinion, it creates a very powerful tool to help our clients build portfolios that will outperform their benchmarks over the long haul.